Hello everyone, welcome to the Ichimoku.co daily stock market review for the trading day ending Thursday, November 12th. Firstly to the S&P 500, and here we've seen very strong selling in this market today, a very large black body candle forming. The market gapped down at the opening, establishing window that may hold as resistance if we do see a rally. The previous day's trading set the market up for this change of trend to the downside, with the previous candle being a strong black body candle. And the sellers had taken control away from the buyers. We had downside momentum built, and that set the market up for this change of trend that we saw. Now there was potential for the market to find support anywhere within this highlighted yellow zone, extending all the way down to 2040. The market took out some very important areas of support. Firstly, this window that was opened up, and the window that held previously as support failed to hold and has been breached and is now closed and of little use to us. Also, more importantly, trading down through the Kijun-sen indicator suggests that we have a negative bias in the in the medium-term time frame in the S&P. And suggest that we could see continued downside. A lot depends on whether we see some strong follow-through following this bearish breakout down below the Kijun-sen. If we do see the market continue further to the downside, looking to strong support to come in around the bottom of this zone, around the 2040 level, and it is an area that we should be watching very, very carefully. In terms of Ichimoku, we do now have still a bullish market in the longer term time frame, supported by the Chikou span, but with the market now closing down below both the Kijun-sen and the Tenkan-sen, it suggests we have a bearish market in the medium and the fast term time frames. If we do see the market attempt to rally, we should be watching this window that was opened up previously for today, and it is an area that may hold as resistance if we see the market rally, as also the Kijun-sen trading around 2052 may hold any potential rally off where the market's closed. Now, with the market closing down at these lower levels, we have established a head and shoulders pattern here, a head and shoulders reversal pattern. And here we have the prior trend. Always with any pattern, we have to have a trend leading into the pattern. You see a lot of people identify what looks like a head and shoulders in this big congestion area, but no trend leading into it. A reversal pattern has to have something to reverse, and it is the prior trend that a pattern reverses. So here we have the prior trend leading into the pattern. Here we have the left shoulder, the head and the right shoulder, and the neckline drawn through the shoulders with the close down below the neckline completing the pattern. Now, some may be tempted to call this a left shoulder, but we didn't actually have a peak formed here. We had still a first time frame uptrend all the way through here. So we had a higher, 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 low, higher, 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 low, an outside day, higher, 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 low. So no downtrend through here. So technically no peak was formed through here. And the peaks are here, peak, trough, peak, trough, peak, trough. So here's the left shoulder, the right shoulder, and the head in the middle here. Now, with the close down below the neckline, I've mentioned that the pattern has been completed, and it has, and our target is the depth from the top of the head to the neckline projected down from the breakout. And our target here is around this previous resistance area, roughly about 2090, 2018, and a very good target, and we could reach that target fairly easily if we see some strong follow through, and if the market can trade through some support that's established down below. And just moving back, and that support here is the 2040 level, and if we can breach down through there, we have a previous resistance area that may establish itself as support around 2019. Now, just looking to the band chart here with the S&P, and importantly, the market has taken out the middle band, and this really does suggest that that very strong bullish tone in this medium-term time frame that we had previously has definitely ended. And there is an opportunity here for the sellers to change the trend in that medium term to down. Support coming in for today's candle at the bottom band at 2045, 2046, and it is there an area that we should be watching very closely. A strong bearish breakout will set us up for a new medium-term downtrend bias, and confirmation of that would be the breakout below the bottom band, and then strong follow through, a strong bearish candle. No sign of that happening yet. There is still an opportunity here for support to come in at the bottom band. If we do see the market attempt to rally off this area, looking to the middle of the bands around 2071, 2072 to hold as resistance. Also with the Dow 30, a change of trend here as suggested yesterday. There was a possibility of it. We were looking for strong support to come in at the bottom of this highlighted zone of previous support and resistance, and the market traded through there in a strong bearish manner. Traded through two other strong support levels, and also through the window, very similar to the S&P, with the window being closed in a very strong bearish manner. Slightly different here with the S&P, where the market is approaching the Kijun-sen, and there is an opportunity for support to come in at the Kijun-sen around 17,418. So it is an area we should be watching very, very closely. Strong support projected at 17,350 just through there. But with the sellers closing with control, finding strong commitment, building on the momentum that we saw from the yesterday's trading, it does suggest that we certainly could see the market testing two lower levels and an opportunity to close down through the Kijun-sen. Now a similar pattern has been set up here, and also similar in so far as this area here, which does look, just eyeballing the chart, does look like a left shoulder, but there was actually no peak technically formed here. There was no downtrend established here, so the left shoulder is at this level, an upward sloping neckline, and the pattern, head and shoulders reversal pattern, confirmed here with the close down below, strong bearish close, suggesting that there is a good probability of us reaching the target. The problem here has been that with this strong bear candle, the market has moved pretty much through midway to the target already, so not a lot of value in placing a trade based on this at the moment. Potential for the market to reach its target is quite good, however. It's around 17,277 and around the previous resistance level. Importantly, the target is through the Kijun-sen, so we could see the Kijun-sen failing to hold as support tomorrow, but let's not preempt the market. Let's watch how the market reacts around the Kijun-sen. Next to the Nasdaq 100, and here we've seen establishment of a downtrend as well in this market, forming a lower high and a lower low on this candle. Sellers closing with control, but the range of this candle is certainly not as large as we saw with the S&P or the Dow, and suggesting that the sellers aren't as eager here. This still is a very bearish candle. The sellers closed with control. They have shown some solid commitment by taking out the previous swing low, but very good support all the way down through to the area where the Kijun-sen is trading around 45.04. We have a highlighted zone of previous support and resistance within there, the 45.62 level, and the Kijun-sen at the bottom. This blue shaded area is a very large window that was established, and it could hold as a very important support area anywhere through down to the bottom around that 4,500 region. The build of momentum here has been quite good. At the open, the market had gapped down, and the buyers attempted to rally throughout the trading day, but then the sellers did close with control, and this suggests we certainly could see the market test to lower levels, but watching 45.62 to potentially hold as support. Next to the Fibonacci extension technique, and now that we're in a downtrend, we're examining the relationship of the current first time frame downtrend to the immediate previous downtrend. And here we've seen the market take out some very, very important levels all in one go on a bearish candle, and this does suggest the strength of the sellers in this market, trading down through the 31.8, 50%, and 38.2, 50% and 61.8% levels, just approaching the 78.6% level. Strong bear candle suggests that our next target we should be watching here is the 100% level at 45.57. And that 45.57 is very close to this 45.62 level based on previous peaks and troughs, and also very close to the top of this highlighted zone. Now the band chart does also highlight how the selling in the Nasdaq 100 is not as strong as it has been in the Dow or the S&P, where the Dow and the S&P are trading down very close to the bottom band. We have seen a breach down through the support at the middle of the bands and in a bearish manner, and this suggests there is a good opportunity for the sellers to continue trading down. If we do see continued selling, looking to the bottom band at 45.11, 45.12 to hold as support. And to the Russell 2000, and very strong selling in this market, a large extension to the size of the black body. The sellers have been in control for the entire day, opening at the high and closing down at the low. Very strong commitment from the sellers for today's trading. And off the Tenkan Sen resistance, previous support area was just slightly breached for the previous day's trading with a bearish candle, and strong follow through today for the breach of the Tenkan Sen to confirm a bear market in that short-term time frame. Also bearish in the medium-term time frame by trading below the Kijun-sen, and now neutral in the longer term time frame by trading within the Ichimoku cloud. So a change of sentiment in all three time frames within the space of 2 days, and this really does show how the sellers have come into this market with a vengeance, and that's in contrast to the previous buying that we've seen in the last week or so. The Kijun-sen failing to hold as support is significant. The strong breach down below there does attest to how strong the sellers are. 1167 was the area there, combined with the previous resistance area, and it had the opportunity to act as a strong area of support. Now we may find support anywhere down through to the bottom of the Ichimoku cloud, down to about the 1130 region. And just looking to the band chart here with the Russell 2000, and here we see the market testing just around that bottom band, just slightly through. The solid bearish breakout suggests that we may start to transition into a very strong downtrend phase in the medium-term time frame. If we do see some strong follow-through, then it would have the opportunity to confirm that. But watching here closely for this area to act as support. We haven't breached very far down through there. We have closed just around that level, so some doubt about whether we should classify this as a strong bearish breakout. Moving next to our asset class ETFs, and here we see gold. The gold asset class ETF, GLD is the code, and trending very strongly down below each of the Ichimoku indicators and down below the lower band, suggesting a very strong negative bias in all three timeframes. Looking very overextended and depth away from each of these indicators, and some buying coming into this market today, with the buyers closing just above the midpoint level and formation of a white body candle suggesting some upside momentum. An opportunity here for a retracement back up towards the Tenkan Sen resistance. It trades at 105.94 and is likely to hold a strong resistance. In terms of relative strength comparative, still down in the lagging quadrant, down below the 100% level in terms of relative strength comparative to the equities market, and momentum of relative strength is down. But it has been moving higher, and the tone is strong now, and suggesting that there is an opportunity here for the relative strength to improve. Next to the bond ETF, TLT is the code, and here we've seen a change of trend to the upside, trading down below each of the Ichimoku indicators. It has been sold off quite strongly on a relative strength basis as well, trading down below each of the in the fourth quadrant here, the lagging quadrant, down below the 100% level in relative strength comparative and on momentum of relative strength. But momentum of relative strength is moving higher, the tone of it is strong, and could turn into an improving quadrant if we do see further upside in this market. Looking to potential resistance on the bands at 119.73 and also at the Tenkan Sen at 120.09. Into some of the sectors, and on a relative basis, the consumer discretionary sector has been one of the better performers in the recent past. It has moved up above the 100% level today and is in the leading quadrant, and the tone of the relative strength is actually moving higher, even though we see a change of trend. And this is in contrast to a very strong selling day in the overall equities market, and the selling here obviously hasn't been as strong as we saw in the overall market. Looking to support to come in at the swing low at roughly 79.74. The market is trading in a bearish manner down below the Tenkan Sen indicator, giving us a bearish market in the short-term time frame, an opportunity for the sellers to sell off if they can breach down through that swing low and find support down at the Kijun Sen at 79.10. Also, something to watch here is that this current bar has formed a pivot point sell signal, and with the strong bearishness in this market at the moment, there is an opportunity here for the sellers to continue this trend to the downside. Also, the industrial sector is one that is performing slightly better on a relative basis. On the Ichimoku chart, however, we are trading below the Tenkan-sen indicator in a bearish manner. Watching the Kijun-sen very carefully. 53.64 is where it trades to hold a support, as well as the bottom band at 53.41. If those areas are breached in a strong bearish manner, I suggest we could see this strong, or relatively stronger outperformance against the overall market fall apart. And to some stocks, Facebook is the first we'll be looking at. On a relative basis, Facebook is continuing to outperform the overall market. So with that strong selling day today that we had in the overall market, we have a much smaller range in this candle, this bar, and the sellers weren't able to change the trend to the downside, even though we've seen the sellers take control. We still are trading up above each of the Ichimoku indicators, and relative strength comparative is moving higher. The tone of that trend is quite strong, as is the tone of the trend in momentum, and is in the leading quadrant. Looking to support at the Tenkan-sen initially 105.92, or prior to that on the band chart, the upper band at 107.16. And just looking at one of the worst performers on a daily basis on the short-term charts, and it's Caterpillar CAT. Caterpillar was trading up above the Ichimoku cloud for the past couple of weeks, but then with the breakout down below the Tenkan-sen, we didn't see this stock recover, and the Tenkan-sen has held as some resistance, whilst the Ichimoku cloud was holding as support, even though the market was moving lower. We also saw the Kijun-sen hold as support, but for today, very strong selling in this stock, with a window being established, gapping down, but finding support at the bottom of the Ichimoku cloud. So this is a crucial area of support for this stock, and if it's breached in a strong bearish manner and we see some strong follow through, we could see this stock continue to trade down. Importantly, on the band chart, we saw a squeeze occurring, a false breakout to the upside, market trading within the bands again, and now a bearish breakout down below the lower band. If we see strong follow through, we could see continued downside, but I suggest we should be watching this swing low at 67.81 to potentially hold as support. If we breach down through there in a bearish manner, we certainly could see further downside. In terms of relative strength comparative in the lagging quadrant, the tone of the trend in the relative strength comparative and the momentum for relative strength is very, very weak, and suggesting that we could continue to see very strong underperformance of Caterpillar against the overall